to this week's episode of Coinscrum Markets. I'm Teana Baker-Taylor. Coming up, FlowDesk's Guilhem Chaumont returns to review the Bitcoin options market this week in Crypto RFQ. Baxter Hines speaks to Texture Capital's Richard Johnson about the new wave of regulated tokenized securities venues in the US. And Ian Taylor is joined by INATBA's CEO Marc and Stokr's Arnab Naskar to talk about the potential unintended consequences of the EU's new MiCA regulation on DeFi. But first, let's take a look at this week's blockchain industry news. With Bitcoin testing its all-time highs this week, evidence suggests that institutional investors, rather than retail, are behind the move, as well as on-chain data revealing that Bitcoins are being removed from exchanges for long-term custody. Grayscale's crypto investments vehicles have topped $10 billion in AUM in aggregate. Anthony Scaramucci's Skybridge Capital has filed an amendment with the SEC that will allow their $3.6 billion fund to start investing in Bitcoin. And exchange-traded products have seen a 53% surge in activity over the past 30 days, according to CryptoCompare's Digital Asset Management Review. At the same time, however, Google searches for the word Bitcoin have remained at the same level they were before the 2017 bubble began. Life may not be so peachy, however, for Bitcoin miners in China, where reports have suggested that up to 74% of operators surveyed have been struggling to pay their energy bills due to a clampdown on Bitcoin OTC trading, currently their only option available to liquidate Bitcoin for fiat following a government clampdown on Bitcoin exchanges back in 2017. Bitcoin miners in general will be back in focus in coming months now that the process for implementing a network-wide upgrade has begun. If adopted by a supermajority of miners, the integration of Taproot could potentially deliver major efficiency improvements and DeFi-style smart contracting to the Bitcoin blockchain. Leading mining pool operator Poolin kicked off the process this week by surveying other pools to gauge their interest in supporting the required soft fork upgrade. Whilst DeFi on Bitcoin sits on the back burner, leading Ethereum-based DeFi exchange Uniswap confirmed the scheduled end of its liquidity program this week. The program, designed to incentivize liquidity providers to join their pools, has been a huge success this year. Whether their market makers will hang around or cut and run remains to be seen. And finally, with DeFi proving the demand for yield this year, and ETH's 2.0 proof-of-stake migration on the cards, Swiss crypto-native bank Sygnum has been quick to get in on the act on behalf of its customers by launching a staking service for the Tezos network, offering users the chance to earn up to 5% interest annually. And that's the news for this week. Don't forget to subscribe to our channel. Next up, Crypto RFQ. I'm delighted to be joined today for this week's RFQ with Guilhem Chaumont of FlowDesk. Guilhem, thanks so much for coming back.
Thank you so much for having me, as usual.
No, it's a pleasure. So today we're going to dig into the crypto derivatives market and a little bit of market analysis. Let's start off with options. It seems like options open interest is increasing at a higher rate than maybe futures and Bitcoin market capitalization. What's driving this?
So yeah, it's really a figure that I wanted to share with you guys today because I think it's definitely interesting what is happening right now in the option markets. Of course, in addition to the regular Bitcoin spot markets. Basically, since the last time we discussed, it was a few months ago, we have seen a 3x increase of the open interest on Bitcoin options. And in the same period, we've seen only an increase of 60% of the futures open interest. So I think there are several reasons for that. The first one is that we are seeing kind of, the futures markets maturing to some extent. Exchanges have launched a new range of products, whether these are, futures, long-term maturity futures, coin margin futures, and also they have launched, a higher range of asset classes. We have notably initiatives from FTX, which have launched perpetuals on, maybe the top 20, top 50 coins. So I think like kind of right now in terms of products, this market is matured. So that's why we are not seeing such a high growth from new products releases. And at the same time, we have Bitcoin options, which are getting more and more interest. If you look only a few months ago, derivatives hit the 1 billion threshold of open interest. So that's very recent. So we are kind of seeing, I think, in my opinion, some catch up in terms of growth rates for the options, and also investors trying to have new ways of getting exposure to Bitcoin to the upside without having necessarily the risk of liquidations like we have seen on the futures.
Yeah, indeed. So, the implied volatility that we're seeing during this bull run that we're experiencing at the moment is pretty low. Is this also a sign that the market's maturing?
Yes, I think it's another sign, and particularly a very, very interesting one. So, we've all been kind of surprised by this bull run where we've seen almost 100% increase with very tiny pullbacks. Only yesterday morning we had a 4 or 5% retracement, but this is very unusual. And I think that there are several reasons for that, and I'll try to speak about two today. The first one is that this market is less retail driven than the previous one. It's not today that we have Bitcoin hitting the news about new all-time high. It's not today that we have our relatives calling us, I want to invest in Bitcoin. It will happen probably later when Bitcoin is at the 50K mark. But still here, it seems that market watchers witness that more institutionals are getting into the market, and they are using spot markets to do that. By the way, so I think that's one of the explanation. The other thing that I see is that, historically speaking, particularly the last year, particularly during the March crash, we had a huge impact of derivatives on spot markets with, strong liquidations, things like this, retail participants investing up to 100x leverage. And I think that this market is being a lot, more rationalized with more regulation. If you look at the BitMEX event, it's very interesting. Recently, their share went from 25% a few months ago to only 10% today. So that's also an explanation why we see less liquidation and as a result, less volatility. And overall, I believe it's just, an overall trend we've been seeing for the past years. If you look back in 2017, the 1 month at the money implied volatility went as high as 150%, and it has only been going down since. And today, the highest value that we have seen in this bull run is slightly above 70%. So that is extremely low. Probably it will go a bit higher, especially when the markets start to retrace. But still, it's a very positive sign that, markets are being more rationalized. And I think that's very positive, especially for the next waves of volatility product that will come next.
Yeah, indeed. So we're also seeing the emergence of new actors releasing the next generation of volatility products, variant swaps, VX, et cetera. How does this impact the creation of more complex structured crypto products on the horizon?
So yes, you are definitely right. What I think is very interesting is that for all the reasons that we have discussed, we are now seeing new products that are created, that are being created, new volatility products. And that's why today I'm very excited to share with you guys this new variant swap that is launched on the Xena exchange. So it's a typical variant swap that allows you to bet on volatility by exchanging the realized volatility against the implied one. It's a monthly contract, typical contract, and we are FlowDesk providing the liquidity for that contract with a very interesting spread that is comparable to what you would find on other exchanges like Deribit. So that contract is traded on Xena. What is interesting about Xena is that they have reduced counterparty risk, if not neutralized, thanks to the off-exchange settlement provided by Clearloop. And they offer also other interesting products with quite interesting competitive fees. So yeah, I think it's only the beginning, of this new wave of product. Also, VIX is along the way that will be like the final vanilla products that will allow to create the structured products that are definitely needed to reach a higher adoptions, particularly from professionals and institutionals. So yeah, we look forward to that, and we will see how it goes.
Brilliant. Last question. We are hovering at around a Bitcoin price of about 18,000 USD today. Where's it going? Is it going up? Are we going to hit 20 by the end of the year?
So it's very difficult, to take a honest and intuitive decision on that. What I can tell you, however, is that if you look at the options, the implied probability on the options of hitting 20K before the end of the year is slightly above 30%. So I think, as far as I'm concerned, that there is definitely a good chance that we get there eventually. When we are there, probably, we will see some pullback and we will have a few weeks of, of prices hovering around. But if I had to take a personal bet, I think we will get there. And looking at the current market, which is, very fast, very directional, I think it could happen definitely sooner than later.
Brilliant. It's always a pleasure to have you. Thanks so much for coming back this week.
Thank you so much. It's a pleasure for me as well.
The subject of tokenized securities has started to filter back through since the early hype phase in 2018, now that companies operating in the space are finally being given regulatory approval. But with securities regulation varying across different jurisdictions, different operators are facing different challenges. Baxter Hines spoke with Texture Capital's Richard Johnson this week to discuss their roadmap since receiving their license from the SEC.
Thanks, Teana. My name is Baxter Hines. I am the Chief Operating Officer at Honeycomb Digital Investments. We are a firm that specializes in creating income solutions from the blockchain for our investors. I'm very pleased today to be here with Richard Johnson, the CEO of Texture Capital. For the last several years, the subject that has fallen off the radar in the financial markets may seem to be around the tokenization of securities. This was a hot topic back in 2018. Companies had long pursued the visions that are now emerging with their prerequisite history licenses and are coming to market with their preliminary issuances and secondary market solutions. With existing security regulations being applied, there are naturally nuanced approaches that need to be taken across the various jurisdictions in which these companies operate. In Europe, firms such as ArcJax, Smart Valor, and the Swiss Digital Exchange have received their licenses. But today, we're going to take a look at the state of play in the US with Richard Johnson, the CEO of Texture Capital, who has recently been authorized to trade securities in the United States. Thanks for being here today, Richard.
Hi, Baxter. Good to see you again. You
too. I'd like to see if you could just start off and tell us how Texture came about.
Yeah, sure. Thank you. So I spent most of my career in the securities industry and the trading side of things, worked on a number of different trading desks on Wall Street, moved into the kind of crypto blockchain space around 2014. I discovered Bitcoin and came at it with a trader's mindset. And then you dig a bit deeper and you realize that there's a whole lot of potential to the technology. So kind of pivoted my career towards that space. And then the light bulb moment for me was really back in 2018. If you remember, it was kind of the last bull market, the last time Bitcoin was at 18,000, as it were. And just after that, we had the ICO boom, and Jay Clayton, the SEC chairman, came out and he said things like, every ICO I've seen is a security. These platforms need to be registered under the Securities Act or the Exchange Act. And I agreed with him. I thought the technology was amazing and that companies should have a path to raise capital using blockchain technology and to issue tokens. So that's when I started thinking about starting Texture Capital. It's been a long journey. We filed our paperwork with FINRA and the SEC over a year ago, and we finally got our approval in September. It's normally a 6-month process, but when you say you're using blockchain, it ends up being double or triple those timelines. So we're excited to move into launch mode here. We have a digital securities license, one of the very few firms in the US to have that. It allows us to conduct private placements in digital form on the blockchain, operate a digital securities offering platform, investment advisory, and secondary market trading through registered ATS, which is an alternative trading system here in the US.
Well, congratulations on getting through all those hurdles with your regulator. It's exciting to see that you've gotten to this point where you can start really making this new technology a reality and start harnessing the opportunities that are there. What do you see as the main kind of low-hanging fruits and things that you can take advantage of now that you've gotten your licenses?
Yeah, I mean, I don't know if there's any low-hanging fruit. There's a lot of work and everything we need to do here, but we're very much focused on the private markets. When people think of the stock market, they think of Nasdaq and NYSE and things like that. But the reality is that the private markets, there are public companies that trade on those exchanges. The public markets are actually much bigger. So, for example, in the US in 2019, there were $2.7 trillion of issuances in private markets, whereas compared to only $1.2 trillion in public markets. And the other thing is that in private markets, there's not a lot of transparency. It's very opaque. There's not a lot of technology even. The market structure hasn't really evolved over the last 40 years. I think the biggest evolution we've seen in private markets is probably DocuSign. So we see this as a real opportunity to come in and kind of rebuild the market structure from scratch with blockchain technology. The blockchain ledger can create a layer of transparency and recording securities ownership and transaction history. And then we apply smart contracts on top of that, which enable kind of programmatic compliance. So again, in private markets, there's a lot of very complex rules around resale, such as holding periods, number of holders, and other types of things. But with a digital framework, you can program that all into the smart contracts. So that's what we're tackling now. We're tackling the private markets. We're helping companies raise money by doing a digital securities offering. We can tokenize previously issued securities, so we're basically just taking the securities and creating a blockchain record. And I think the main advantage of digital securities is in the terms of transfer of value and on the trading side. So like the ATS is going to be key to a lot of our business strategy.
That's terrific. Now, there's so much more you can do with these blockchain solutions than what can be done on paper today. So what securities do you already have listed or do you have in your pipeline? So
we did just get approved. So we literally the end of September. So we've really just kind of started accelerating our go-to-market strategy. It's going very well. We're talking to about 10 different issuers about coming onto the platform. What's interesting here, I don't know if this is the same in other parts of the world, but real estate is a big focus. And there's a lot of interest in real estate companies or funds doing tokenization on the blockchain. I think the reason for that is that, let's think about it. Real estate is a massive asset class. It's everywhere, of course. And it's also very illiquid. So, a lot of fund structures here, they're like maybe 5 years, 7 years, 10 years, people are locking up their money. But the returns, generally speaking, have been very good. So there's a lot of demand for getting into these types of investments, but there's low liquidity. So that's kind of the sweet spot for using blockchain technology. So I think we're going to see a lot of real estate entities coming onto the platform. Also seeing some interest in like VC type funds. There's already been a few of those that are out there. But we're targeting any type of company. Doesn't have to be a blockchain company, to kind of, to come in and use this and have some transparency, be able to connect better with investors, and also be able to offer secondary market liquidity to their investors and to their employees.
That's terrific. And what jurisdictions are you able to service right now?
Just the USA. It's the biggest capital markets in the world, so that's the one we want to work in.
Okay. Well, maybe since we are now back on the US, talk just a little bit about the regulatory environment there and really what you are seeing. What's this whole process of getting regulatory compliant? What's that look like for you?
Yeah, it's interesting. I think that's obviously the big difference with crypto is that, a crypto token can, trade in, Japan and then Europe and then the US very easily. It's not the same with security tokens because they're kind of confined by the jurisdiction they're in. So the way they behave in the US is likely different to how they behave in other types of jurisdictions. I think hopefully one of the goals is to have this global 24/7 trading for security tokens. A lot of people talk about that. I think we're a long way away from that. We need to kind of do the basic stuff in our own backyards first. The regulatory environment has been, it's been challenging. I think, there was a lot of, like going back to the ICO boom as well. A lot of people, regulators, were looking at this and trying to separate the good projects from the bad and figure out what was really going on and figure out a framework for companies like Texture to move forward. So, that's been a slow process, but there's been a lot, it's been a lot of change recently. I don't want to get into too much detail here, but there was a couple of no action letters from the SEC in recent months, indicating that they're kind of changing their tone a little bit. We've also, in case you missed the news, had an election here, and that means there's going to be a change in fact, Jay Clayton's already resigned. There's going to be a change in leadership at the SEC, so we could go in a different direction there. And I think just kind of another little tidbit might be interesting. There's a new senator got elected from Wyoming, who is very pro Bitcoin. I saw something this morning saying she intends to educate the rest of Congress about Bitcoin, and has previously invested, I think it's state funds into crypto assets. So that's going to be a very positive voice to have on Capitol Hill. At the end of the day, I think a lot of companies, they moved offshore out of the US. There was a little bit of regulatory arbitrage going on for a while with jurisdictions like Gibraltar or Malta kind of popping up and being very crypto friendly or blockchain friendly. But I think that's kind of changing. At least I do think regulatory attitudes are improving here in the US, and they're getting more comfortable with it. And it's never going to be a revolution. It's going to be an evolution, and we're happy that we're part of that system where there are regulators, and we want to work with them to bring this whole space forward.
Now, it sounds like we're definitely headed in the right direction and making progress. Maybe also talk just a little bit about the ecosystem that you deal with. So obviously you got an ATS license, but maybe talk just a little bit about who else you have to work with, whether it's custodians or transfer agents. Who else really makes all of this stuff happen?
Yeah, that's a very good question. Custodians and transfer agents are key. I think a transfer agent is called a registrar in the UK, but they basically record the official ledger of ownership. You basically have to have one of those involved here in the US, otherwise you can't do it. A lot of people say, oh, but blockchain is the record of ownership, and let's use that. Well, we're not there yet here. There needs to be the transfer agent in the middle. And custodians are another key feature as well. And that's been one of the things that the regulators have struggled with. If you think about, let's take Bitcoin, who's custody, you can custody it on your private key, but there's concerns. What if other people, if you took that framework into crypto, into security tokens, what if other people had the private key? How can you ensure that it's safe? So you really do need a completely new framework for custody, different from crypto and different from regular securities when you're dealing with security tokens. And that's actually been one of the things slowing development down in the space. Good news on that front is that the DTCC is seen to be moving or making moves into this space. Their Project Whitney's on their website. Take a look at that if you haven't seen it. It's very interesting. So, that's another thing that we need to have. It's not just companies like Texture. We can't do this on our own. We need the other, market infrastructure players around us to kind of move forward. That's how we really get takeoff in this space.
Yeah, it's really great to see that so much of that is being built out, and that people who have professional money management experience and professional experience within the financial community are coming into the space. And it's really, making a complete community in which to do business in this regard.
You can tell us a little bit about what you're up to, Baxter, because I don't want to hog everything here. I know that you've got a book out and you've got a money management company, right?
Well, that's correct. Yes. So at Honeycomb Digital Investments, we're looking to provide products to investors that are looking to get into this exciting new digital space. As I mentioned earlier, we are focused on income solutions for our investors. And we have a lot of experience with dealing with financial advisors and people who are fiduciaries over big pools of money. What we're looking to do is provide some turnkey solutions for them to be able to get into this new and exciting space. And we are looking to both run some funds as well as be a sub-advisor to different separately managed accounts that can be on an RIA's platform or act as a separately managed account for an institution.
Yep, exactly. And again, that's we're not managing money. We do want to have investors on our platform, and we obviously want to have Honeycomb on our platform as well. But at the same time, you can be a funnel for more money to come into this space, more investors to come in, which again is going to help the space grow. Yeah,
I think having educational types of opportunities like what we're dealing with now making these interviews, having books, having different conferences, webinars that people can attend. People are going to continue to get more and more comfortable with this new technology, and I think it's just going to grow for many years to come.
Absolutely agree. That's why we're here.
So maybe let's talk just a little bit more about what you're doing on the technology front. Talk about some of the tech that you're using to make all of this possible.
Yeah, so we are, we built all our own technology, but we're not a technology company. We're a broker dealer. That's our business model. We have, we can issue tokens onto the Ethereum blockchain, but we are blockchain agnostic. We are talking with some other blockchains about possibly having, supporting them. And we're also kind of agnostic with regards to other token providers. So if somebody wants to issue a token using Securities, we'll happily, we want to trade that. We want to get that into our ATS and figure out a way to trade it. And so that's kind of our approach here. One of the great things about the blockchain space is that there's a ton of great technology out there that we've been able to use and adopt because there's been so much innovation going on. So it's really a very bountiful space in terms of technology.
No doubt about that. Maybe talk just also, we've got limited time, and I just want to ask you one more question. What other types of securities do you think we can list in the future? And what I mean there is, you mentioned some about equity, but what about some other types of asset classes or different kinds of interesting investments can you think of that may go onto the blockchain?
So I may have a different opinion to some other folks in the space. We're focused on equity, pretty much equity. I think that, like I said, one of the key things is having liquidity. And I know that there are other players in the space looking at, for example, fixed income. And that's not our expertise, it's not our focus, but I have, heard and seen examples of how there's like significant cost savings there. But I'm doubtful about how much liquidity you're going to be able to get in the private credit markets. Often it's hard enough to trade, off the run credit in listed markets and public markets. So I think, something else we're looking to integrate is stable coins at some point in the near future. That could, one of the things we really want to kind of innovate here. And if we have a security transaction go off in the ATS, then to be able to settle that instantly, delivery versus payment in an atomic transaction versus the stable coin would be a huge development. So that's definitely on our roadmap for 2021. I think it's very deliverable. And that is something that you can't do right now in public markets. They settle in T+2. And there's a lot of people looking at how to do it. So another thing we're trying to do here by going into private markets is showcase all the great things you can do with the technology.
No, I think, if we can get equity starting to trade on the blockchain, that's going to be in and of itself just a massive step forward. What you said earlier about the private markets is so true. It's just grown tremendously over the last 2 decades. I think the stat that I saw said that there have been 5 times the number of companies that are private today than there were in 2000. But the number of publicly listed companies has dropped by something like 40%. So, that trend, I doubt, is going to subside. I think, companies are going to continue to want to stay private, and this new blockchain-based structure is just perfect for them to continue to do that.
Yeah, talking about staying private longer. The average IPO this year, I did some calculations on that. That had been around 13 years before they went public. So there's been a lot of employees who've probably gone through those companies and weren't able to exercise their options or getting that cash out. There've been a lot of investors who've been stuck with that investment for a while. I'm sure they'll do well having gone public, but that's a lot of liquidity risk to take on. So we want to solve that problem. And we don't expect the private markets to be as liquid, but more liquid is a big improvement and can really transform how capital is allocated throughout the economy.
Yeah, it's definitely a win-win-win all around for either the issuer of the security, the like you said, the employees, the investors. You could just reduce so many frictions in being able to have the blockchain run the cap table, looking at everything from the options to the stock, whatever it may be. It's just so much more dynamic and easier to maintain.
Yeah, absolutely.
Totally agree with you. Well, thank you so much, Richard, for being here today and taking time to do this interview. We've really enjoyed talking with you, and I'll pass it back to Teana at this point.
Thanks, Baxter. Good chatting with you.
You too.
After a lengthy consultation, the release of the European Union's Market and Crypto Assets, or MiCA, regulation a few weeks ago didn't seem to ruffle too many feathers amongst the service providers that will almost certainly be affected by the new framework. Less certain, however, is how the regulations will affect both software developers and end users operating in the DeFi space. Ian Taylor, chair of CryptoUK, spoke with Marc, CEO at the European Blockchain Trade Association INATBA, and one of their members, Arnab Naskar, co-founder at Stokr, to dig deeper into the weeds.
Well, thank you very much, Teana. Here we are today with Coinscrum Markets, another session with all things regulatory. Today's session is titled The Unintended Consequences of MiCA for DeFi. Today I'm joined by Marc Taverner, the CEO of INATBA. Welcome, Marc.
Thanks, Ian. Hi.
And also Arnab Naskar, co-founder of Stokr and also at INATBA.
Hi, Ian.
Hi. Hello, guys. Firstly, let me just set the scene here and then we'll go for some brief introductions. INATBA is the International Association for Trusted Blockchain Applications. It's a leading convener in the global blockchain ecosystem, offering developers, companies and users of blockchain distributed ledger technology a forum to interact with the regulators and policymakers, bringing the technology to the next phase. Most recently, INATBA has launched a MiCA task force in response to the European Commission's proposed regulation, Markets in Crypto Assets, the so-called MiCA regulation. This is going to definitively change the landscape for crypto service providers and crypto assets in Europe and beyond. INATBA's initial analysis of the regulation indicated that MiCA is detailed, comprehensive, and extremely broad in its coverage. The proposed regulation leaves few, if any, areas of the market untouched. It permits very few exceptions and intended to be highly prescriptive and directional for both industry participants and member states. Moreover, because MiCA is both far-reaching and exceptionally detailed, it places an urgent requirement on all market participants to invest significant time to understand this regulation and the ways that it would interact with the varying member states and the current laws that exist right now. INATBA anticipates this will create significant disruption as all ecosystem participants scramble to understand, process, and operationalize this vast interwoven set of regulatory and compliance proposals. Okay, well, let's introduce Marc. You want to give a brief introduction of who you are and what you do?
So I'm Marc Taverner. I'm the Executive Director of INATBA with the International Association of Trusted Blockchain Applications. And as well as focusing on finance, we focus on 13 other use cases for blockchain applications, distributed ledger technologies. And it is true today, we're talking about finance and MiCA.
Thank you, Marc. And if I could ask Arnab for a brief introduction too.
Thanks, Ian. Thanks, Marc, for the short intro. My name is Arnab Naskar. I am the co-founder of Stokr. Stokr is an investment platform that is helping companies to issue digital securities on the blockchain, as well as helping investors to invest into those digital securities. In specific reference to INATBA, I am also the co-chair of the Finance Working Group. It's one of the largest working group at INATBA right now, and it's also dealing with the matters of MiCA, as well as the pilot regime and other financial related aspects of crypto assets.
Thank you. All right, well, let's get into the detail here. We did cover off a few of the touch points a few weeks ago with Sean Jones of X-Ray Consulting. Today, we're going to focus on the impacts on the decentralized finance arena. So if I could first bring Marc into the discussion and ask you really for a general explanation as to the work that you guys at INATBA have been doing in relation to MiCA and how much of the regulation is general and equivalent to traditional market participants that may fall under, say, MiFID, for example.
Yeah, thanks, Ian. So the work that we've got going on within INATBA is we focus on MiCA and the pilot regime. So I just want to go back 2 paces. The digital finance strategy that was issued by the European Commission and passed from the Commission to Parliament on the 24th of September consisted of the 3 packages, actually. The Digital Operational Resilience, DORA, as it's referred, the Market in Crypto Assets, MiCA, which is what we're going to talk about today, and the pilot regime, which calls for an approach to sandbox, creation of a sandbox environment around the tokenization of security assets. So within the finance work group, we are focusing both on the MiCA and the pilot regime files. And the work that we're doing, and I'll focus just on MiCA for the purposes of today's discussion, the work that we're doing is very exhaustive, as Arnab alluded to. So we've got an internal and an external focus stream of work on MiCA. The internal stream of work is where our members have come together and are analyzing clause by clause the MiCA proposed regulation with a view to submitting evidence into the parliamentary process that will support considerations that we think are for the benefit of the industry. But because this particular proposed regulation is so potentially impactful for our very young industry, we thought it would also be wise to secure the opinion of the wider ecosystem without the encumbrance of INATBA membership standing in the way. So we've also launched an external MiCA task force, which is open for anybody to participate in. And it consists in the first instance of a questionnaire where we're looking to gather evidence and opinions from market players, ecosystem collaborators, adjacent industries, other trade associations, and interested individuals, such that we can fold that evidence into the work that's happening within the INATBA work group, inside of the finance work group, but also that will end up in a report that gets produced into its own right from that public MiCA task force and submitted as evidence as a standalone piece of work that represents the wider voice of the industry. And the reason we're doing this is because we think this moment in time is so significant and yet is massively underappreciated by the vast majority of market participants. And I'm sure we'll come on to the reason for that in a short moment. But we're trying to cover a lot of ground as INATBA, and we're really calling on the wider ecosystem to come with us, to leverage our platform, leverage our proximity to both the European Commission and the Parliament, and to leverage the relationships that we have in place with the Council, which is where the deliberations are currently taking place. And there have already been 2 group discussions around the MiCA file held within the European Parliament. So this is very much a piece of work which is in progress and not something which we should be talking about in the future, because this is in the process of being ratified into regulation as we speak today.
Thank you. And if I may hand over to Arnab, and from your side of the fence, both as a lawyer and a founder, can you give us a sense of your key takeaways and perhaps what jumps out at you the most with regards to this proposed regulation?
Yes, I think Marc rightly highlighted over here that we're in a very crucial time at this point of time where the European Commission and the entire, I would say, the European legislative processes are really looking into regulating the crypto assets, if I may say so. And the market participants need to be aware, because any kind of law that is passed in this process, for be it MiCA, be it a part of, I would say, the task force, be it a part of the pilot regime, this will have a future impact. And this future impact will be not only for the companies that are operating in Europe and servicing Europe, but also for the companies that is operating outside Europe and want to access the European market. So it's a very crucial moment. Now, let's talk about MiCA. One, I would say there are 2 very interesting aspects of the MiCA over here. Is if you are an issuance, I would say, entity for issuing any kind of crypto assets that are not qualified as a financial asset, if you're an issuer, if you're a service provider, if you are an exchanges that is helping into those digital assets exchange, you will be falling under this MiCA regulation. That's the baseline statement. In terms of, I would say, structurally, if you are providing a support services for crypto assets like security tokens, if I say so, those crypto assets which are qualified as transferable securities or financial instruments. In that case, how it will be traded, or how the secondary market will be performed. It's kind of a European level sandbox you can think of what the DLT pilot regime is proposing, and that comes under that perspective. This, I would say, the MiCA is very wider ambit. I would say, it's a very elaborate framework or regulation, I would say. And the European Commission has taken a lot of effort to develop it. But also we need to understand the aim in which the MiCA was drafted and after the consultation they did in March 2020 and how the process moved. Somewhere you can see the MiCA went far beyond its major outreach and tried to cover a lot of aspects which it didn't intended. And now in that sense, the market participant need to come up and say what specific provision does not make sense in MiCA, maybe covered at a later point of time or maybe elaborated and maybe clarified it later. As a third part, I would like to say some specific provision which the market need to be aware of. The first one is if you are issuing a digital asset, which are crypto assets in this case, you need to have a legal entity. And that's a very crucial aspect. You cannot have it without a legal entity. Now, how crypto assets like Bitcoin can perform, these are still, I would say, not clear from MiCA, need to be answered, but a legal entity is an ideal. So whether it is DAO or something, there are a lot of questions will come, which we are not yet in a situation to answer.
Arguably, some of the real innovation going on in the industry falls under the banner of DeFi, where many assume they remain unaffected, often under the assumption that they're doing isn't a regulated, what they're doing is not a regulated activity. So if I could perhaps bring Marc in here and ask from the broad perspective of DeFi, or indeed those folks developing entirely new base level protocols, could you perhaps explain where and how MiCA has potential to impact such projects?
Yeah, and thanks for the question. This is a critical focus for INATBA. Because it goes to the very heart of decentralized applications, which is the very essence of the technology, which is blockchain and DLT, in that these are the applications that can be built, facilitated by blockchain and DLT, that create value, that advance different business models or support different business models, and mechanize trust and provide transparency. So it is true that as we look at MiCA and its current draft, then decentralized projects, which include DeFi, and in the world of finance, DeFi has grown to be pretty significant at the moment. Under MiCA, which requires an operator, a service provider, or an issuer to have a legal entity registered within the EEA. The EEA is a group of 30 countries that include the 27 members of the European Union, but also brings into play Iceland, Liechtenstein, and Norway. So if you are a decentralized finance project, for example, based in the UK, and you decide that you would like to trade within that group of 30 countries, under the terms of MiCA, you will need to have a registered legal entity within the EEA, within those 30 countries. Now, if we just pause and think about that for a second as it relates to DeFi, and if you are a UK-based DeFi company, there are two challenges there that require some consideration. The first is that by the very nature of a decentralized project, at least most of the way in which most of the projects are currently structured today, there is no center. There's no central point. That's the very nature of decentralization, and that's why we can establish mechanical trust and extrapolate all of the other values that create the attractiveness of these models. So by the very essence of the structure, the construct of a decentralized autonomous organization or a DeFi project, trying to then flip that into an entity where there is a legal body is relatively tough.
Yeah, thanks, Marc. And if I could hand over to you, Arnab, and since this regulation was announced a few weeks ago, do you think from your experience, the industry has fully understood the implications and what resources companies and startups and builders of DeFi projects need to understand and how it affects them, for example?
Yes, I think Marc rightly, I would say, wrapped up on the main territorial implications of MiCA, which is very crucial because you cannot say you you can avoid this MiCA scope because you're sitting in UK or somewhere else. And the same is, if you remember the GDPR, the discussion that we did, I think, not long back, the GDPR had a very extraterritorial application, right? Even if you're sitting in India and trying to, store some data of a European citizen, you fall under the GDPR scope. The same is what the MiCA is. It has an extraterritorial scope, and people need to be, mostly the companies that are working in this space, need to be aware of. And one of the most crucial aspect, I would say, what a lot of DeFis are not really I would say, taking care of here is the stable coin matters and how the MiCA is trying to regulate that, because a lot of DeFi products are being fueled by stable coins like DAI or Tether or those kind of structures. And this will come under heavy regulatory scrutiny right now with the current draft of MiCA if it's published like this way. That means all this DeFi application that is relying on those stable coins, it can be asset reference tokens or it can be an e-money token, automatically you are attracting certain regulatory obligations and burden on your place. So for DeFi, it's very much crucial that they follow at this point of time the MiCA in the current draft, and they also use the opportunity that we have right now till the time this draft becomes a published law. And we share all our concerns and all our, I would say, points with the regulators, with the legislatures right now, and we try to address it, because once we lose this momentum and once this window of opportunity goes away, there will be very little thing that we can do for this industry.
Marc, we know, and as you've mentioned, MiCA touches on the centralized market participants, but from the perspective of DeFi, what are the key functions that you think would be deemed equivalent to regulated central functions? Can you discuss such service providers and custodians, clearing houses, brokers, etc.?
Yeah, thanks, Ian. So at the moment, in its current draft, MiCA classifies crypto asset service providers as follows, and the list is kind of inclusive of these. So it refers to services that deal with custody, administration of crypto assets on behalf of third parties, any operation of a trading platform for crypto assets, which we just spoke about, the exchange of crypto assets for fiat currency that's legal tender, or the exchange of crypto assets for other crypto assets. So, not currency that's legal tender, but other crypto assets. The execution of orders for crypto assets on behalf of third parties. So if you're helping place orders, or the placing of crypto assets, the issuance of crypto assets. And issuers are dealt with separately as well, which I'll come on to in a second. Or the reception and transmission of orders for crypto assets on behalf of third parties. And vitally, the final point that is addressed under the description of crypto asset service providers are those providing advice on crypto assets. So what we said at the top of the conversation is, in relation to MiCA, it's very, very broad and all-encompassing, and there could be unintended consequences in these very broad definitions of service providers that pulls unknowing market participants under the scope of MiCA when it wasn't intended, perhaps, by the Commission in drafting, and the consequence could well be quite detrimental to the smooth functioning of this still very young and innovative market. So I think, the considerations that I would suggest the DeFi market pays attention to is around innovation, is around contributing evidence around the value of the applications that have been built, the purpose of the applications, the innovative process that needs to survive and should not be regulated out of existence, dare I say that, and to help us as INATBA gather that evidence in a logical way and present it as education, as data, and as informative evidence to the Commission, to the Parliament, to the Council, and to the various committees who are at the moment assessing this information. I just want to touch on one point before I hand the floor back to you, Ian, which is just a consideration, because we were talking about crypto asset service providers, but one of the really unique innovations that we've seen blockchain bring to the young technology innovating marketplace has been the ability to raise funds. And an impact of MiCA is to limit the ability of projects to raise funds to a ceiling of 12 million euros. And under 12 million euros, a white paper is sufficient to be able to raise those funds over a period of 12 months. But if you want to go above that ceiling of 1 million euros over a 12-month period, then you need to go through a whole raft of additional compliance, issue a prospectus, and provide a great deal of regulatory information that demonstrates compliance. And one of the challenges that we think that presents to the industry is not only some pressure on a very innovative model to fund in a new and quite forward-looking way projects that have got a lot of technical merit, but it also creates a little bit of a friction point and a point of counterance whereby there is, within the traditional channels established through regulation, an upper ceiling of 8 million euros that is available to market participants who are not raising either for or using blockchain projects. And therefore, we think perhaps one of the objectives and unintended outcome of this proposed regulation is that there has been a little bit of disparity between technologies. It's not technology neutral, because where there is a limit of 1 million euros over a 12-month period for projects that are focused on blockchain, whereas for other projects in traditional markets, that ceiling is 8 million before additional compliance comes in. We see the gap there in equal treatment as being quite large, and we think that could have quite an inhibiting factor on the success of projects, their ability to raise capital. And as we know, in young and innovative industries, often access to capital is one of the big barriers towards innovation. And we fear that as we look at this through a European lens, that might create a lower level of appeal to innovators to come and base themselves in and around Europe, which conversely will mean that Europeans lose access to young innovators, young companies that are innovating, and therefore creating a competitive edge.
Thank you so much, guys. I wish you well and good luck with the great work you do there. And now back to Teana.
You've been watching Coinscrum Markets. Thanks for joining us. See you next week.